Top investors in history, strategies and lessons that built fortunes throughout history. Some investors have stood out not only for the astronomical profits they accumulated, but also for their visionary strategies, legendary patience, and the way they changed how the world understands money. They didn't just get rich, they left lasting legacies. In this video, you'll discover who the greatest investors of all time are, understand what made them unique, and learn the most valuable lessons that can completely transform the way you manage your finances and investments. We begin with Warren Buffett, known as the Oracle of Omaha. Buffett built his fortune not on bold bets, but on the philosophy of value investing. He believed the key to wealth was finding solid companies with strong fundamentals and buying them at a price below their intrinsic value. But what really set Buffett apart was his patience. While many sell at the first rally or panic at the first drop, Buffett held on to his investments for decades. He invested early in Coca-Cola, for example, and kept his shares even during tough periods. Buffett's core lesson is simple yet powerful. Invest in what you understand, seek real value, and think long-term. Next, we have Benjamin Graham, Buffett's mentor and the father of fundamental analysis. Graham introduced the concept of the margin of safety, buying assets so far below their intrinsic value that even if things go wrong, the losses will be minimal. He believed the market was driven more by emotions than logic, and that investors could profit by acting rationally while others were ruled by greed or fear. His book, The Intelligent Investor, remains a Bible for those seeking to invest wisely. George Soros is another name that cannot be ignored. Known for breaking the Bank of England, Soros made over $1 billion in a single day by betting against the British pound. Behind that boldness was a refined philosophy, the theory of reflexivity. Soros believed markets do not reflect reality accurately, but are shaped by human perceptions, which create cycles of euphoria and panic. Soros's key lesson: understanding human behavior is just as important as understanding numbers. Another investment giant is Ray Dalio, founder of the world's largest hedge fund, Bridgewater Associates. Dalio believes the economy functions like a machine with predictable cycles that repeat over time. He developed clear decision-making principles and a culture of radical transparency within his firm. To Dalio, understanding the dynamics of interest rates, credit, and productivity is essential to forecast economic movements. His ideas are widely shared in his book Principles, where he emphasizes discipline, constant reflection, and intellectual humility. John Templeton also deserves attention. He was one of the first global investors and became known for his courage in investing in countries and companies that others avoided. Templeton believed that to find true opportunities, you had to look where no one else was looking. During World War II, he bought Japanese and German stocks while the rest of the world fled those markets. Decades later, he was richly rewarded. Templeton's core lesson: be brave when others are fearful, and seek value where no one else sees. Peter Lynch, manager of Fidelity's Magellan Fund, is another heavyweight. He achieved annual returns of over 29% for 13 consecutive years. Lynch argued that individual investors had an advantage over professionals because they could spot trends in everyday life at supermarkets, stores, or during casual conversations. His philosophy was, invest in what you know. He also believed that by studying a company well, an investor could find 10-bagger stocks that grow tenfold. The secret was doing your homework, understanding the numbers, and being patient. Carl Icahn, on the other hand, is known as an activist investor. Instead of just buying stocks and waiting for appreciation, Icahn directly intervened in companies, demanding changes in management, strategic direction, and capital allocation. His aggressive approach often created value through pressure. Lesson here: investors can also be agents of transformation if they deeply understand the businesses they invest in and know what needs to change. Charlie Munger, Buffett's right-hand man at Berkshire Hathaway, is often described as a multidisciplinary thinker. He brought concepts from psychology, biology, math, and physics into the world of investing. For Munger, understanding human behavior with all its biases and irrationalities is just as important as understanding finance. His most famous advice is, avoid being stupid. He believes avoiding basic errors is more important than seeking genius. Thinking independently, avoiding the crowd, and staying calm in turbulent times define his style. Investors like Jesse Livermore, although controversial, also left valuable lessons. Livermore gained and lost fortunes in the financial markets, and his story is full of excess and dramatic turns. His main contribution was showing that emotional control is essential. In moments of greed, he risked everything, and at times, lost it all. His mistakes are now studied as cautionary tales. Discipline, emotional control, and risk management are indispensable traits for any serious investor. Another fascinating name is Jim Simons, founder of Renaissance Technologies. Unlike the others, Simons was a mathematician who used algorithms and data to identify patterns and make trades based on statistics and probabilities. His medallion fund had such high returns that it was eventually closed to outside investors. Simons proved that even without a traditional financial background, one can succeed in investing through intelligence and innovation. He represents the convergence of technology, mathematics, and finance, an increasingly dominant force today. And we can't forget names like Philip Fisher, who popularized the idea of investing based on quality and long-term growth. Fisher believed that companies with strong innovation and good management were destined to grow, even if they seemed overpriced at the moment. He deeply studied products, company culture, and executives before investing. His focus was more on people than on numbers. His qualitative analysis approach inspired generations. Across the globe, we find Li Lu, Chinese-American investor who influenced Buffett and Munger in recent decisions. Li Lu stood out by applying value investing principles to emerging markets, especially in China. His life journey from political activist to billionaire fund manager is an example of how strategic vision and resilience can build a successful investment career, even in the face of adversity. When we observe the greatest investors in history, certain lessons repeat. First, they all developed their own style, adapted to their personality and worldview. Second, they prioritized knowledge, whether technical, emotional, or behavioral. Third, they understood that success in investing requires time, patience, and a clear long-term vision. And perhaps most importantly, they learned from their mistakes, adjusted their strategies, and kept moving forward, even after major losses. You, who are watching this video now, may not have billions in capital or access to massive funds, but the tools these giants used are within your reach. Buffett's discipline, Soros's boldness, Graham's analysis, Lynch's curiosity, Templeton's courage, and Munger's reasoning are virtues anyone can cultivate. True investing begins within you, with education, healthy financial habits, and a strategic mindset. If you've made it this far, congratulations. You're already among those who are willing to learn from the best and apply these lessons in real life. It's not about copying, it's about being inspired, adapting, and evolving. Each of these investors faced their own time, crises, and limitations, yet they built lasting fortunes, some of which still influence the world today. Now, we want to hear from you. Which of these investors inspires you the most? Have you already applied any of their strategies in your daily life? Leave your comment below. Share this video with friends who also want to grow financially. Of course, if you're not yet subscribed to Mundo Enriquecedor, subscribe now. Turn on notifications to get new videos with incredible stories, timeless lessons from great investors, and amazing financial curiosities. Here, knowledge is your greatest asset.